probably 80% uranium, 10% gold and silver, and the rest is in all the other metals. Inside the uranium sector, I'm as close to being diversified as I can.
How long do you expect your portfolio to stay the way that it is right now?
I would like to keep my biggest position that I have today. It's also my best performer. It's Encore Energy. The most popular of them is Global Atomic, and then I would go for Denison Mine.
How do you deal with those emotions?
I spent more time thinking about how to deal with the volatility and the emotions than I do about the investment case.
What is the diversification that you've gone for? Like, I know it's some silver, gold, uranium. There's some copper and some tin. At least that's what I've read on your website. So what's the split between those five resources?
I've taken portfolio theory and how you should construct your portfolio and know how to do it in practice, and I do nothing of it. So my portfolio is not well balanced. So it's probably 80% uranium, 10% gold and silver, and the rest is in all the other metals.
So like battery metals and stuff like that.
Yeah. That's the copper and the tin and the rare earth and some oil.
Okay.
So I know the theory of how I should construct my portfolio, but that's not what I follow. But at least you know the rules before you break them. So.
That's a good quote, probably. But this is actually one of the main reasons why I wanted to talk to you today, because I saw you. I went to the website and I thought, like, look at this guy. He's running other people's money and he's going thus heavily in uranium. He clearly knows something more than I do. And so I thought, what's the reason behind you going thus heavily in one thing? Like, is it like market fundamentals on uranium specifically, where you say something like, this is the absolute best asymmetric play that I've seen? Or is this just like the thing that you want to do going forward? Like you don't want to do any diversification. How did you take that decision?
When it comes to managing other people's money, that is very easy for me, because I say when people invest with me, they are in charge of their own money, so they have to be diversified before they go to me, and they put their risky part of their portfolio with me. So I will be the very risky part of their portfolio. But if they want to have low volatility and stable dividends, for example, they should put all of those money elsewhere, because I'm just for the risky part of their portfolio. So I'm not compared to other money managers, I don't have any. I will not say that past returns are no guarantee for future profits. That is, for my part of the investments, that's even worse, because you could have a nuclear accident, and then the portfolio will, at least 80% of it will go down a lot.
Mm-hmm. So. How do you deal with those emotions? You're starting to talk about it, because, like, look, I have about half of my and my wife's money actually into the stock market. It is heavily biased in uranium. For me, it's about 70% uranium, about 20% silver, and about 10% gold, I think. I used to have some battery metals. I had a battery metal royalty, but I just sold out because I thought I want to focus more on these things. But it's not a lot of money. Like, it's not a lot. It's not a huge sum of absolute. Like, it's not a huge absolute sum of money. I mean, I'd be very sad if I lost half of it, a nuclear accident or whatever happens, but I'll probably be okay, especially given that I live with my parents. I don't have any overhead, as I told you, but we also have our investments, other investments, like we have our restaurant business and we have some other physical assets as well. But you're still, you're telling people it's risky what you're doing, but you're still dealing with more and other people's money. So I'm just wondering how you deal with the emotions that can come after a week like the one that we just had in uranium. So tell me about it. What do you think about emotions?
I spent more time thinking about how to deal with the volatility and the emotions than I do about the investment case on it. Because when I saw the thesis for uranium, I just saw, yes, you can make a lot, but the biggest challenge for everyone is just being able to deal with all of this. Because I remember even worse last year during July to September. That was 2 months of just pain for 2 months. So you have to at least be mentally healthy, I think, is my biggest biggest focus area. And for example, when we have red days in the market, I will just go away from the computer screen and try to get out and do something else, because it doesn't help just cheering with the computer screen all day. That is just something you have to deal with. You have to have some kind of disconnect. It's very close to just putting your head in the sand, but it's measured putting your head in the sand. So it's not something you should do when the sector is closer to getting into balance with, we're getting closer to the marginal cost of production, for example. But at the moment, I don't see us not going higher before we at least get some more price discovery in the sector. So,
So if you think that, you've probably been buying these last few days, huh?
If I had some money, I would.
That's what it is. Everybody tells you, like, hold on tight and BTFD, right? Buy the bleep dip, right? But what if you run out of money?
And I'm not one of those people that always have 50% cash and always buy at the bottom. I just scale in monthly. But I've also had a private investment the last year, so I had to put some money aside for that outside the stock market. So I have, but I don't count the private investments as in my portfolio, because you never know how they will end up. But
of course,
so
makes sense. You also got married last year, by the way. Congratulations.
That the honeymoon is also not free, so
no, definitely not. And if you wanna keep your wife at least a little bit happier than mine, which is to say, no, it's a long story. I'm not gonna go into it, but it's good that you did it, and I'm happy you're doing it. I know that you're a runner, by the way, Jude. Like, you probably use that to get away every now and then as well, right?
I notice very often that when I'm outside running, I get a couple of ideas I don't get by just sitting at home. So I don't know if it's just the increased blood flow to the brain or something that makes you at least a bit more refreshed than.
Oh wow! Sorry about that.
So it's a very good way to at least try to keep sharp and get some new perspectives on things, just not just in front of the computer screen. So
no, it's absolutely right. I don't necessarily run or anything. I do mountain bike. I get that, but I'm not as deeply as invested into this as you are, as I said. And again, I'm thinking about that diversification. What about within the sector? Like, do you diversify between the different companies, or have you picked like 2-3 uranium companies and that's what you're sticking with?
Inside the uranium sector, I'm as close to being diversified as I can. So I break all the rules outside, but inside the sector, I at least try to have some geographic diversification. So I just checked my portfolio recently, and it's not the perfect mix, but I have about 50% in US companies and 30% in African companies and 20% in the Canadian one. So
okay, nice. So you're also diversifying between producers, developers, and explorers.
I don't like having producers actually.
Okay.
I feel that they're a bit. They will have. This is by watching you having interviews earlier with Rick Rule saying that you should have the CGN, Cameco, and Kazatomprom, and I have none of those. I have all developer companies almost. So companies that hope to get into production this cycle or later. That is my main focus for my portfolio, but none of them have any cash flow to speak of today. Mm-hmm. Mainly a promise of a cash flow in the future. So.
do you feel comfortable talking about specific names that you might be going heavy on, like just a couple of ones, or would you prefer to keep that to yourself?
I can go into names, but I will just always say that a reason for me owning a company and why it's a big holding for me is probably more to do with timing when I bought it, when it was cheaper than it is today. And it's not always a good deal after the fact or a couple of months or years later. So, but yeah, let's try.
Okay, well, let's try. Tell me, what have you gone heavy on recently?
This fall, I've increased my position in two of my companies. Both of them are good performers in my portfolio. The most popular of them is Global Atomic. So they're almost so popular that I'm afraid of them being overvalued compared to other companies. But still, a high-grade uranium company in Africa is not that common. So, and their business model compared to other companies with the cash flow from the zinc operation, it's just a must-have in the portfolio. So when they had their first big dip during this last fall, I had to increase my position in them already because they're just that well-run company.
Okay, no, that's definitely a nice name. You know, let's maybe make this question one of the viewers, and one of my favorite questions too, by the way. The gun to your head scenario, maybe you've heard it before. If you had to keep only 3 uranium stocks in your portfolio from what you have right now, which ones would you pick and why? Now, obviously, you told me why you'd pick Glow, so let's assume Global Atomic is one of those. But what about the other two?
I would like to keep my biggest position that I have today. It's also my best performer. It's Encore Energy with Bill Sheriff. He had the strategy very similar with his last company, Energy Metals, in the last bull run, where they went from just a company at the valuation of $1.6 million, and 30 months later, after some land acquisitions, they sold for over $1 billion. So they're a very good company, and they know what they want. They execute on strategy. So and they also don't overpromise. They just deliver results. So
no, that's a good one.
They are and the third company, I know there's a lot of companies people like, but if I have to choose the third one, I want to choose the Canadian one, and then I would go for Denison Mines with their ISR project in the Athabasca Basin.
Those are nice names. I'm happy you're bringing up companies that have uranium in the ground and not only on the share certificate, as Rick Rule says. There's a lot of those as well. I'm guilty of it. I'm going heavy on some of those up in Canada, some of the explorers. But all of those are high quality companies. Which one of those do you think has the highest chance of becoming the next Paladin? Do you even think that one of those three could become the next, the Paladin of the last bull cycle?
I think they have a chance of doing it at least Global Atomic and Encore Energy, because they're started from such a low starting point. But except for that, I think actually Paladin has a chance of doing the same one more time.
Oh, wow. That'd be great. But also it's important to note what you just said. You're talking about them being able to do that from the starting point, maybe from the lows in 2016. But do you think that's still in? Like, do you think that, I mean, Global Atomic is not the, it's not the cheapest company out there, as you just said. So, they would be in double digit billion if they did if they did 100x from here, right? So do you think that's possible?
Yeah, I don't feel comfortable saying anything about a company from now. I would be happy with the 10x for most of my companies, and then I would be over the moon with the performance. The biggest gains were done around 2020 March, I think, is when we talk about the 100x or even more. Now you have to have a company in at least sub $100 million market cap to look at that kind of returns.
Mm-hmm.
So,
okay, no, it makes sense.
And of course, you can of course get that with some kind of explorer that hits something like an arrow deposit. But
no, that's what sold me on the Explorers, just the greediness of it all.
Yeah, and I have some explorers, but there are smaller investments than my developers with already pounds in the ground. So.
Mm-hmm. Okay, no, I definitely like that. And actually, as we're talking about these three, I'm just thinking those are great companies. But then before that, we were just talking about the diversification, and I think I get your case for going heavily on uranium. I mean, I get it. I'm doing practically the same thing, even though the stakes for you are much higher than they are for me. And you told me to balance that by having intra-sector diversification. But here's a counter argument that friend of mine from Twitter, Menachem, gives to me. He gives an argument to having any type of diversification, and so he says, if you're that certain on uranium and you clearly have the courage to go heavily on that one thing, why not just go all in on like those three companies? Like do the 80% that you have in uranium, why not put it all of it into Glow Energy, Encore Energy and DNN?
That's not actually that is actually an idea I've been thinking about a bit, but because it's much easier to just manage three positions and maybe just have some explorers on the side. But for example, when we saw earlier this in January with Kazatomprom in Kazakhstan, I at least want to have them in 3 different jurisdictions, because if suddenly Canada does something with their company, or in the Athabasca Basin, I would not like to be stuck with just one jurisdiction. So I would like to at least have 3 companies for being more focused. But my investments my investments are a bit wider than that, just for diversification. But I see what it's saying, and I think that's actually not that bad a strategy. So it's just that you're a bit path dependent on where you end up. And I started out with basically a shotgun strategy, with just hitting all the companies at once that I had focused on, and letting the winners run. So that's how the portfolio is how it is today. 2 of my biggest investments at the time are not my biggest investments now, because they haven't performed as well because of timing and when I got into the companies. So
this does, diversification does make sense to me, especially as a novice investor. I don't know if I'm picking the right companies. It could be, I don't want to name any names, but I could be picking a bad company with a bad management or whatever. For example, I've also chosen for diversification myself, and I have more than a few uranium companies. As you said, I'm almost as diversified within the sector as I could be, including, I think I have all three. Yeah, I have all three of the companies that you just mentioned as your top three. But so that's something that I do understand. But when it comes down to diversification within the sector, there's also something else you can do. The Menachem tells me is that you can diversify your strategies by which you approach them. But there's some things that just don't make sense for me personally, or at least at this point in my career, they don't. For example, options don't. Although I went to college, studied financial analysis, I got an extra course in options even, and I think I understand them. I don't want to say I do, but I think I understand them. I understand how they work at least. I still don't touch them. I don't short stocks. I don't do options. I don't do margin, any of that. But I have heard from people, as I said, like Menachem on Twitter, that there could be really profitable strategies that include options. So do you do any of that, like shorting options? Do you do any of that, Gjermund?
No, I don't do any of that. And I think I have a similar approach to that to you when it comes to options, because I've taken some courses at the university for that, and I've read some books about it, and it's something I might want to do in the future, but at the moment I will just focus on the positions I have. So it's very interesting, but I think too many people are dealing with options and short selling and all of that, and some people are probably very good at that, but most people are just wasting their money doing that. I think.
Yeah, no, I know I'll be doing it. I'm not gonna have my same focus that I have right now, and it's a lot more hands-on thing that you're doing if you're doing options. So same for me. Yeah. There's hard parts to our strategy too, by the way. Eventually we'll have to sell. And I also think that it takes a smart but also a brave man to sell exactly when, everybody's running the opposite direction, run for the door when everybody's trying to get in. So that's one of the hardest part. What do you think, by the way? What do you think needs to happen for you to start? Because, you said you're scaling in, so I'm just going to assume that you're going to start scaling out of uranium once you do. But what do you need? What do you think needs to happen? Like, is it a certain spot price do you want to see, or something else entirely?
I've seen a lot of people having that kind of strategy at certain price levels in maybe spot and also term. I've seen the strategy from Smith Weekly. I've followed a lot, but the thing I see is I wonder what will happen, because I think many will have the same kind of target. And what will happen if everyone has, for example, 80 as one of their targets? What will happen with the market when we see that? So I'm trying still to refine that kind of strategy. Maybe you should sell before, or maybe you should do something else. So because I will never be able to hit the top. I will try to hopefully get in some selling on the way to the top, but I also hope that I will be able to also be owning some when we're starting to turn and the market will turn.
No, fair enough. I think I get that. Very good point. And what do you think is going to happen? What do you think is going to happen at 80 if that's a lot of people's place where they're looking to get out and they've already done like 2 or 3x on their stocks, and you start scaling out? Is that really good? That's something to think about. I haven't thought about it at all. How long do you expect that to take? Or, maybe a better question would be, how long do you expect your portfolio to stay the way that it is right now? Like how long do you think you're going to be overweight on uranium for?
This kind of waiting has of course expiry date. So if you had asked me how long the portfolio would be the way it is during September last year, I would say within a year. Now it's a bit slower, so now it might be over a year before I will start at least putting some money aside for other investments. So I see maybe a year at least with this kind of risk distribution in the portfolio, because this is not how my retirement portfolio will look like. At least.
No, I can only imagine. I mean, if you want to live past 65, you don't need to be 80% on uranium. At least if you're thinking about your heart. What do you think comes after that, though? Like, what is there a trend that you're noticing right now that you think like maybe it's just too early to jump on, but it could be favorable, could be a big thing in 5 years? Like, you're in Norway, so hydrogen or something along those lines. Is there something you're noticing?